Good morning. Good morning and welcome to the weekly live. I, oh my goodness, I am still a little bit sick from last week. I have no idea what I had, but I'm here and I'm alive. So it's all good. For those of you that are just joining for the first time, I am Mary Jo Irmen, and I am the author of the books Life Without the Bank and Farming Without the Bank. And we talk about the infinite banking concept, and I am going to go over all of my clients that I've had in the last couple of weeks. So say hi. Oh, Facebook. Let me see if I can do this. Oh, I can. Yay. All right. They're switching stuff up on me again. And it makes it harder for me to see if you guys have comments. Hey, Stasha. Excuse the coughing. That's going to happen. So last week Friday, I went in to have a COVID test. I've not ever had, I had to have a COVID test before I had surgery for my gallbladder last year. But I went in to have a COVID test to see what was going on. When I get sick, I kick it in like 24 hours. There was no kick in this, man. It was like full on. And so I went in thinking, well, maybe I have like a low grade of it, but I just want to make sure, Still haven't got my test results. That was a week ago. Let's not talk about the efficiency of our government agencies. Thank God I'm not dying. So, anyway, I feel a little bit better, but still coughing like crazy. Good morning, Tyler. Good morning, Rhonda from Idaho. Nice. I hardly ever talk to anybody from Idaho. It's very weird. The western side of the country is very silent. However, we have a lot going on every other side of the country. I think I talk to more people from like New Hampshire, Vermont, that area than I do from the western side of the country. So it's very crazy. Okay. If you have not gotten the books, you can go to farmingwithoutthebank.com and you can grab the books there. All right, before we get totally started with clients today, which I have a lot of them because I haven't done a Facebook Live in about 3 weeks. So before we get started with all of that stuff, I want to ask you a question. I was talking to my friend Alan Crockett, and he and I were visiting about what he does with farmers and ranchers and questions he asks and all that good stuff. And here is the question he asks about where you want to be in 3 years. This is my question, and it is the Dan Sullivan question. Dan Sullivan is a strategic coach. He owns Strategic Coach. But here is the question. If we were having this discussion 3 years from today, and you were looking back over those 3 years, what has to have happened in your life, both personally and professionally, for you to feel happy with your progress? Now that's a really long question for my little brain. So my question to you would be, 3 years from now, if you looked back, what would have had to have changed for you to be happy? It's crazy how many people get these books and they don't call for 5 years. If we don't change what we're doing today, in 3 years from now, we're going to be in the same position. If we don't change anything that we do in the next 3 years, we are going to be in the same position. Those people that call me that they got the book 5 years ago, 6 years ago, 2 years ago, whatever, and they have not read it, they are not in any different position than they were today. So if you've not gotten the book, grab it. If I do believe that the book is on sale for Christmas. or it's going to be going on sale for Christmas. And it's going to be, I think it's going to be $10 off. So go to the website, farmingwithoutthebank.com, or you can go to withoutthebank.com and you can grab these as Christmas gifts. Because guys, if we don't do anything different, what's going to happen? And then obviously grab Becoming Your Own Banker, because that goes with it as well. I am not sure where we're at with book prices, but if it's not on sale, it's going on sale. So if you don't buy it now, get it next week. Okay, let's see. Who else we got? Hi, Shane. How's it going? I like that they put the little anniversary thing beside your guys' name. Hey, Michael. How is PA? I was just talking to somebody over there yesterday. Pennsylvania. I got lots of people in Pennsylvania, or I've talked to lots of people in Pennsylvania. Okay, my friends, we have, I talked to a guy in the last couple weeks that he is trying to get started on his own. He works off the farm. He has a consulting business. He also has custom application business, and he is farming. His dad farmed, but his dad and business partners split, and his dad lost the farm in the middle of that. The business partner, the ex-business partner, has passed away, and guess what? Dad did not have any life insurance on him. Even though the business partnership paid for life insurance on this business partner, he did not get any of the proceeds. If you are going to have business partners and you are going to have insurance on them, you need to own that policy personally, so when the business partnership falls apart, you have ownership still. Let's say that this guy would not have passed away. Well, then the gentleman that I talked to, his dad's family, right? They would have gotten the death benefit if his dad would have passed away first. But typically, if we are going to have a business partnership fall apart, not end well, but fall apart, we are going to be losing some money in that deal one way, shape, or form. Even the people that end up with the business will most likely end up with some sort of a financial loss. And so make sure that if you are in partnership with somebody, you guys have insurance on each other. All right, this guy had great numbers. He's making good money, but he is not utilizing the money correctly. So the crazy thing is he's got a lot of payments, but he said, I didn't even know what I had for payments until I did the spreadsheet for you. And yes, he did a spreadsheet for me, which was awesome. But he's like, I didn't even know what I had. He said, I don't have a problem making money. And that comment was it happens a lot, and we don't recognize it, or we don't even see that it's happening. And he didn't see it until he made the spreadsheet, right? Or even until I pointed it out. We can make money. That's fine. You can spend money, you can make money, and if you're good at making money, fantastic. Just work harder. You'll make more money. But how are we utilizing that money? The more we spend, the more we have to make. The more we don't look at our finances, the more we have to work. The more money we have to make to stay ahead. So we can feel like we're doing really well by getting ahead, but if we're not paying attention to what's happening with the money and what entity the money is coming from, then how do we know who's making us money and who's losing money? And are we just literally spinning our wheels? Are we just saying, oh, we got to go do this job today because it's one of the businesses that we run, right? So utilizing money is much different than making money. He is very good at making money. Now, he's got about 4 payments that are coming to an end this year. So that's going to free up like $30,000. He's got homes that do not have correct mortgages on them, rental properties that do not have correct mortgages on them. He has equity in them that he is overpaying every month on these mortgages, and the rent is basically covering the payment. Refinance it, get that payment lower so you have cash flow to do things. That means he could free up another $10,000 a year. So that's $40,000. Now he gets to decide how honest of a banker he wants to be. Do we want to take all $40,000 and put it into a life insurance policy, which would be the right thing to do? Or do we want to just take some of it, but we used to pay $40,000, now that's going to be done. Most of his payments are going to end in December. So next December, he's going to have all sorts of money to do stuff with. So it's just kind of a matter of where we want to start. But there's a lot to be learned from this one client, okay? And here's the other comment that he made, is he listened to the book at least 5 times before he had a consultation with me. 5 times. And he bought Nelson's book and he listened to Nelson's book. He had a lot of questions that were still answered in the book, but they were number questions because he did not see the numbers in the book. And so if you guys do not have the book, let me show you. I actually have numbers in the book. It's all laid out for everybody to see how money's going in and out, what that illustration looks like, all that good stuff. And he said, I'm buying the book the second that I get off of this call with you. Even though you buy the audiobook and you listen to it and you get all the numbers with the audiobook, that does not mean that you are sitting there and going back and forth between what I'm saying in the book. The audio is fantastic, but get the audio and the hardcover at the same time. Don't pay extra for it, people. But he really truly understood the concept and the thought process. Now, some of that we still had to work on, like quit paying stuff off early. He had another loan that's like $48,000. He's like, well, I've got all this money right now. I'm just going to pay off that loan. But the payment was only like $24,000. Why are you going to give them an extra $20,000 of liquid money? Then you're going to go to whoever you're getting your line of credit through, and you're going to borrow money from them. Because I don't remember what company he used, but he uses a company that he basically borrows money for fertilizer and those sort of things. And so they charge him 0% interest, but then he has a late fee. Well, the late fee works out to be like 2.2% interest. So it's not free. Nothing is free. Nobody is giving you 0% out of the kindness of their heart. One way, shape, or form, they are making money on interest. If you don't believe that, you have your head in the sand. It is just that simple. 0% interest is not 0%. You go buy a vehicle at 0%, they mark that sucker up so they're making extra money. There is no question. People are buying into the 0% thing like it is the greatest thing ever. Nobody can lend money at 0%. Okay, but he is going to give up $20,000 that he would not need to borrow from them and even pay 2% on, right? So he has a lot of stuff going on and he has a lot of money sitting there, and there's so many things he could be doing to utilize that money differently, and he's not. He is just working really, really hard and really, really good at making money. That is not how it goes. That is not how it goes. If you can utilize money differently, guess what? You don't have to work as hard. We just have to do things a little bit differently than what we normally do. Okay, let's see. Oh my gosh. Did you guys hear that? Yeah. I'm being protected from nothing, probably the wind. Okay. Have another gentleman that I talked to that has been farming forever, and he's seen me speak at a conference. So that was 3 years ago, probably. He got home, he said he put the book on the shelf, but he never forgot about it. So he finally pulled it out because guess what? In 3 years, nothing has changed. And so he is not keeping his books either. So the first guy that I talked about, he's not keeping his entities separate. He's not keeping his books. He's clearly not looking at them. Didn't even know what his loans are. This guy, very similar situation. Had no idea really what his numbers were. Basically let the accountant take care of it. He, though, is not buying things to avoid taxes. So financially, he has very few loans, which is absolutely fantastic. And he is making some money. There is no question that he's making money. But his thing is his kids do not want to farm. They don't live there. They don't like the town that they grew up in. They basically don't want to come back. So he has nobody to hand the farm off to, and he wants to be done in 7 years. He does not want to farm until he's 100, right? He wants to be done. They want to travel. They want to do all sorts of things. And so he is wondering, well, how the heck do I get out of farming? Because he is putting a lot of money into IRAs over the years. So now if he quits farming, he's going to get hammered in taxes because he's not going to have any write-offs. So what does he do? I'm like, well, why don't you find some young guy that wants to buy land and owner finance him? If you owner financed him, your payments, he'd have like $90,000 worth of payments a year. I'm like, why not do that? Or you could do some crop sharing. And so you would still have some expenses and you wouldn't have to pay so much in taxes because we would have those expenses. So there are ways to do that to get out of the system without having to die. I said, so here's the thing. He's like, well, we have a trust set up and all the land is going to go into a trust. I said, do you think the kids are going to want the land or do they want the money? Oh, they'll want the money. Then sell the land today. Put it into life insurance. You are going to leave them more money than they would have ever gotten in land anyway. Income tax free. Okay, so there are ways to do this. We just have to think about it a little bit differently. But we gave them an opportunity to actually retire in 7 years and say, you know what, we do have some income coming in through sale of a land. He said, my gosh, the interest on that land note is more than I make in a year. Exactly. So we either let the bank make interest or we make interest. If we are older farmers and ranchers, why are we not selling that land today? Especially if our kids don't want it. If our kids want it, why are we not selling it to our kids? Okay, I get capital gains. I 100% understand that. But can we avoid some capital gains if we sell it for sale by owner? Or if we sell it owner financing? I say yes, as do the accountants that I have asked about this strategy, because I am not an accountant. You need to talk to an accountant and you need to talk to an attorney that can write up the contract. And no, it's probably not as easy as they make it sound. Nothing is, but do your due diligence and don't just sit back and say, oh, I can't do it. Y'all know what I think of that comment. And if you don't, go back a few podcasts and listen to my podcast where I got a little riled up. All right. Good morning, Jarrett. Okay, then I had another guy that just punched a clock. That's all he did, went to work. He did not farm. He did not have a business. He does not have rental properties. He does not want any of the above. He just wants to go to work, and that is totally fine. Not a problem with that. He really was struggling with the aspect of, well, I still really like my 401k. Well, that's fantastic. Love your 401k. I don't care what you do. But he had a lot of questions about the structure of the policy. Because there are people out there putting 90% of our money to cash value and only 10% to death benefit. That is not a good policy. Long term, that thing is going to become taxable and it's going to mech. And so we talked a lot about that. Because these people, here's the thing, people. In the insurance world, you either get your money now or you get it later. Meaning, you have all the growth today or you have growth later. If it's going to grow slower up here, it's going to grow faster down here. Okay? Some people don't need access to the cash today. So great, then we can grow slower down or we can grow faster down here, right? But with this policy structure that he was looking at, which is complete BS, we're going to give you all the cash today. All of it today. And that is based on companies that are projecting really high dividends. What happens if that doesn't happen? Now we don't have all that money going in the policy, so it mechs. And it's all going to grow taxable. Well, now we just did the exact thing we are trying to avoid with the infinite banking concept. Even the structure that I do, which is typically a 75-25 split, typically, not always, that is still, it's not pushing the limits, but it's more than what Nelson even had in the book. If you look at Nelson's book, it was like a 60-40, 50-50 split. Okay? But now everybody wants everything right away because we have no darn patience. I mean, come on. You put money, and this is what I told him. You're holding me to a different standard. You put money in your 401k and you have access to zero of it until you're 59 and a half, and it's at risk. But now you want access to all of it? And you're questioning if it is going to grow and how it's going to grow. Don't hold me to a different standard than what you're holding your 401k. Y'all are putting money into 401ks and giving up access to every red cent. And if you borrow against it, there's rules, they garnish wages, they tell you how to pay it back. You have no control. So think about what you're saying and what you're doing when you're talking about using a whole life insurance policy versus, oh, I want to put money in a 401k. Okay? For him, it's a little different story. He has no entrepreneurial ideas at all. I rarely talk to people like that because most people want rental properties. They want to farm. They want to start a business. They need the liquid cash today. He doesn't need it today. So great, put it in your 401k if that's what you want to do. But don't ask me then for 100% access to cash. We still are buying death benefit. We still are selling life insurance. At the end of the day, it is a life insurance policy. And there are costs to buy the life insurance. Okay? So that was an interesting conversation that I just don't have very often. Because most people that I talk to are going to want to have some sort of passive income, business, whatever. Oh, Stasha, I think I've had one or two that I've not been riled up on. You're so funny. Okay. Then I had another lady she owns a HVAC company, having a hard time getting employees. So her income did go down a little bit because it's just her that owns this company. And so she's making really good money. And again, not really paying attention to what's happening with the money. She lets one of her kids manage her books and she doesn't look at it. She said, I know I have money every month and I'm good with that. Which is absolutely fantastic. I totally agree. And at some point, I would love to check out as well. But we do have to look at our numbers and see, what are we spending money on? What could we be doing better? She was kind of forced into owning a business, didn't really ever want to own a business. So she just really needed the income and ended up owning her own business. And so, for her, we've got a lot of money that we can do stuff with. And then the next part for her was just, what do we do to transition out of that business? Because she too is not going to be able to work forever. She's got maybe 10 years left. She's in her mid-50s. So she's maybe got 10 years left. But physically, that is a hard job for a woman to do. Women are not built to be carrying air conditioner units. Right? So there are lots of, she needs some sort of an apprentice or something and just can't find anybody that wants to work and do quality work, which is what America is up against right now. Okay, then I had another guy. If you guys saw my last Facebook Live, I just did really fast Facebook Live a couple weeks ago. But it stemmed from this gentleman. He had a really good job, and he quit the job to start a business. But he did that without getting any equity out of his home, assuming that he would have this business plan. He has some contracts that he already has signed and dotted and all that good stuff that people are going to hire him to do X, Y, and Z job. And the bank says, nope, I can't give you a loan. And I can't give you a loan because you don't have any income and you haven't been in business for 2 years or more. And now, as I have a friend whose dad owns a bank, she corrected me, this is not the bank's fault, this is federal regulation. Yes, I understand that this is federal regulation, but at the end of the day, the bank is playing with the feds. And so the bank is saying, I can't do it, right? And we can't give you money if you haven't been in business 2 years. So if you think that you are going to quit your job and then you're going to go to the bank to borrow money as a business loan, it's not happening, my friends. You need to get that loan before you quit your job. Refinance your house before you quit your job. This gentleman has tons of equity in homes, in rental properties, in land. Tons of equity. Almost all of his farm ground that he had when he farmed is paid off. Not all of it, but a lot of it. And so he's renting the farm ground out because guess what? Farming, he bought things to avoid taxes because that's what he was told to do. Commodities tanked. He quit farming. He got stuck with an IRS bill and a huge credit card bill. He is still paying those off even though he got a really good paying job. Now, if he refinanced the homes, he would have enough money to pay off the IRS, to pay off the credit cards, and to possibly do some stuff with the business. But he can't do any of that if he doesn't have a paycheck. So he may have to go get a job and work for somebody for a short time so that he can refinance all those things if his wife's income does not qualify to be able to refinance all those things. So when I tell you guys, go get yourself a 30-year mortgage, I'm not joking. What in the heck is the point of doing a 15-year mortgage, which is what he did? We do a 15-year mortgage and we saddle ourselves with this big, huge house payment and we suffer for 15 years. Guess what? Life happens in 15 years. If something happens that you need to make a lower house payment, you can't do that without refinancing. If you did a 30-year mortgage and you did not use the infinite banking concept, then just pay extra. It doesn't matter. That tiny little bit of interest is insurance to life happening. Okay? I see this all the time, these 15, 10-year mortgages. What for? Just pay it off early because you're going to save a little bit of interest. But now you saddled yourself with this huge payment. And in a world like we have going on right now, we don't know if we're going to have a job or a business tomorrow and what the heck is going to get shut down. Okay? So make sure that you are making good decisions and you are looking forward or at least paying attention. He had no idea, no clue that the bank would shut him off. Okay? Some of what he is in is most likely because he has not truly paid attention to finances. He can work and he can make money, just like my first guy. He has no problems making money and he knows what he's doing and he's had great off the farm income. But you cannot listen to an accountant that is a paper pusher. There is a difference between a CPA and an accountant. Okay? One of them pushes paper. They just try to get you to zero on your taxes and that's it. And that's the other thing. If you own a business and the accountant is trying to get you to zero on your taxes and then you want to go buy a house, the bank's going to go, you don't make any money. How are you going to pay for the house when your taxes don't show that you make any money? Because guess what? The little people that are checking boxes based on whatever the feds tell the bank they can do, right? Those people are checking boxes. The box says, did he make any money? Nope. They don't look at what you're doing with the business and saying, oh, well, they bought things to avoid taxes. They could have used that money to make a house payment. They don't look at those things. They look at your net income. and you don't have any. And so as much as awesome as it is to not pay taxes, it then causes problems on the other side when you want to go to the bank and borrow money. Okay, I had another young guy that he did not come from a farming background at all, but he helped on a farm and he wanted to farm. And so that gentleman is helping him kind of get started, but his dad has lent him a small amount of money to get started and build some chicken buildings. And so he does not love chickens, but Costco came in and said, hey, we need some chicken growers. And he took advantage of that to get started. So he's going to have some money to buy some land. Again, though, he had a very short-term note, like a 5-year note on a building, because that's all they would do since he had no experience. So he can refinance that, or he can suck it up for 2 more years and basically break even and not make any money. But when he does, if he can get through the next 2 years, then he's going to have like $100,000 a year freed up, a little over $100,000 a year. And that is huge. So as much as I would love him to tell to refi, if we can just, he's a single guy, not married, no children. And so if he can continually lay low for 2 years and get that thing paid off versus refinancing it, that would be a much better option for him. And I know he has big, huge aspirations, and that is, I love it. I love it when people have huge ideas and want to do things and they're go-getters to do it. I absolutely love it. And so I hate to tell him to stop and not do those things. So he really has a choice of what he wants to do. He can either do those things and have a little and go refinance it, or just suck it up for 2 years and pay it and get ready for when that money comes in. But I was really impressed with the fact that he wanted to get into farming. How do I do that without any history? Nobody is lending him any money. The gentleman that he worked for has been super kind and is mentoring him, but that still means he needs some money to get started. And he figured out a way to do it. Maybe not his favorite way, but he figured out a way to do it. And so for people that say, well, I can't get started because I've never farmed. Yeah, y'all know my answer to that too. You can get started. Where there's a will, there's a way. It's not going to be the traditional way of walking into the bank. At the end of the day, when the bank says no to you, it is the biggest blessing you've ever encountered. Because if the bank said yes, you would be so far underwater that you would then be wondering how you're going to get out. The bank saying no means you have to be more creative and think of better ways to do it without the bank. That I absolutely love, because so many people have done it and they've had to be creative. Do they have to work a little harder? Yeah, probably. But you don't have the bank breathing down your neck, because just like the first guy that I mentioned today, he said, I just want to get out of this cycle. He's like, I am to the point where I'm going to be stuck if I don't quit. And you will. Eventually you get so far in that you can't hardly get out. If you talk to any big farmer, they look at me like I'm a complete moron. Mary Jo, I need 3 million of operating, or I need 1 million of operating, and I don't have that right away. They need so much that they can't even fathom using some of the policy and not using all of the policy, right? They're like, I need 1 million in life insurance or this isn't going to work. And they throw their hands up because they've gotten down that road of using the bank, that now all of a sudden we have to figure out, how do we get away from it? And this kid really should possibly have a policy on his dad, because his dad is the one that funded him a little bit. And if his dad passes away, he's obviously going to need to pay off his family. So and his dad is young yet. So having a policy on his dad would not be a bad idea. Okay. And then, good morning, Jim. Then I talked to a dairy farmer who is making 7 figures of net income a year. Yes, making a profit. It was super fun to talk to him because I don't talk to a lot of dairymen, and when I do, typically we're struggling, right? We're making no money. And so I really picked his brain. What is he doing differently that nobody else is doing? Well, he's not buying things to avoid taxes. And I am like a broken record with that comment. But I'm telling you guys, I've seen thousands of farmers' numbers, and the guys that are not buying things to avoid taxes are not in trouble. And so he has not bought things to avoid taxes. Instead, he has taken any cash flow, right, income that he has taken that income and he has bought things or built onto the farm things that will produce more income. He has not used the cash to go buy new tractors and combines and balers and silage and whatever it is. No, he has used that money to expand and buy more cows that produce more cash flow. I did not ask him if he had robots. I should have done that. They do have quite a few employees, so I would think not, but I'm not sure. But he is always looking at things that produce cash flow. He is reading things like Robert Kiyosaki stuff. He is listening to, he is transitioning the whole operation from dairy to just beef cattle because his children don't really love the dairy. And so he is transitioning it all to beef cattle. He's not doing that all at once. He's being very smart about it. He's breeding his milk cows as beef so that they can then go straight to the pasture, and they do not, it's not like he's got all these, milk cows that can only be milked and they have to be sold in this huge transition. Being very, very smart about it with a transition plan of 5, I think it was going to take him 5 years. This is awesome. Most people are like, I'm done tomorrow. I'm not going to do this transition thing. I'm not going to put money into things that create cash flow to me. So think about that. If we can have, and he knows his books. Here's the other thing. He has somebody that does his books, I believe, but his dad creates a spreadsheet and they know what it costs per cow per 100 weight of milk. They know exactly what it is costing them per 100 weight of milk. I shouldn't say per cow per 100 weight, per 100 weight of milk. They know their numbers and how expensive it is. Why are they successful when so many others are struggling? And they have had the downturns and they have survived through the downturns because we don't have any loans. They have one loan and it is a tiny mortgage on their home. And I mean tiny mortgage on their home. For somebody that has 6 children or whatever they have, it is very, very small. So if you tell me you can't make a profit, what are we doing? Do you know your numbers? How are you utilizing money? The better and the more efficient we utilize money, the more money we have. If we use money to create more cash flow, that is when we start winning. Not using money to buy a depreciating asset. That just costs us money. It's not making us money. And then I had another client who her income all goes into her savings or 401k because they live off of her husband's income, and they are super, super good savers. But it's crazy because she is maxing out that 401k every single year, like $13 or something like that, $1,300 a month she's putting in. And savings. It's absolutely crazy to me. So if you want to buy land, which they're going to end up buying some land. So if you want to buy some land, You can't do that with your 401k. So quit putting money into a 401k if you want cattle and you want land and you want equipment to farm. Use your money that you saved and then pay it back, and you would still have your 401k retirement, right? If you put money into a 401k, you wait till you're 59 and a half. If you put money into a life insurance policy, you can borrow it, buy your equipment, buy your land, pay it back, and have it for retirement. The reason that we think we have to put it into our 401k is because we are compartmentalizing our money. We don't need to compartmentalize our money if we're honest bankers. But society has not taught us to be honest bankers, so therefore we compartmentalize and we put it at risk. Why? Stop. It stops today. Then I had another gal who is in a really hard position because of her health. She is not really able to do a whole lot, so she is raising some meat goats and they are renting a home. So their big thing is they wanted to buy this home, but they don't have the down payment for the home. I said, well, if you've been renting the house and the guy is super, super nice, why don't you just ask him to own or finance you? He's only in his 50s. And then as you kind of get back on your feet with your health and everything starts to take off with the goats, then you can pay him off earlier. You can go to the bank and refinance and get the money to buy him out, whatever. But at least then you own the place. And so she had not thought of that, but she was going to ask him that. And meat goats are a big deal. They really are becoming a bigger and bigger deal in this country. And so it's just a matter of time before that really takes off for her. In fact, she's already got all of them sold before they're even born. And so if she can get some more, then they can be just in a better position. Good morning, Miss Holly. All right. And then I had another couple that he is employed and they are living, their housing is provided for them on the operation that they live on. And so they are really wanting to start something and buy some land of their own. But they're really they want a lot of acres right away. And they have no money for a down payment. They don't have anything saved. She's not working because they have a couple kiddos. And so we don't need to start extremely large, right? We don't need 600 acres. We don't need $1 million property to get started. If you can start with 40 acres and slowly add on, that doesn't mean you can't ever sell those acres. It doesn't mean you can't ever buy anything new. It just means that if we're going to start with 500 or 600 acres, then what happens? Then we have to buy the cattle to put on the acres, because in this scenario, they're ranching. So then we have to buy the cattle to put on the acres. Well, now we have a land payment and we have a cattle payment, and that is a recipe for disaster. I see it all the time. So if we're going to buy the land, can we do some custom grazing so we don't have the cattle payment, but we have the income automatically coming in? Can we start smaller? If we want to buy the land and the cattle, can we start with 100 acres? Can we start with 50 or 80 acres? I don't care what it is, but let's be reasonable and not have to shoot for the moon right away. And that really is a lot of people's, I don't want to say a problem, but their challenge of thought process to get over. Because of the area that people live in, the majority of people think they have to have some big, huge operation because I'm not really a farmer or a rancher if I'm only farming 40 acres or 80 acres, or if I only have 80 acres of pasture and I only have, 100 cows. I'm not really a rancher. Or I have 10 cows. Who cares what other people think, frankly? I don't give a rat's what. Because they're not the ones paying my bills. They're not the ones seeing the bank account. Do we really want to struggle and put ourselves at financial risk because we wanted something so large? They are in a great position. Let's try to save as much as we possibly can, be a little bit patient, and then watch for a great opportunity to come by. Maybe we want to just buy the cows now and run them on somebody else's stuff. Let somebody else do some custom ranching with them, but we have the cows. Maybe we own the cows and we rent some pasture, right? but we don't have that huge land payment and cattle note. Because if you guys talk to me, if you listen to me, y'all know I do not like cattle notes. I don't really have a good reason for it. I really don't. Except anybody that I see with cattle notes is struggling. And there's a lot of factors that go into that, so I'm not going to just say it's just the cattle note. But when we have a loan on cows and cattle prices go down, then what? Then we can't make our loan, and all of a sudden we're in trouble because we have this cattle note. And the bank doesn't want the cows, right? They want the payment. So I always prefer to not have a cattle note. If you have a land note, great, you can spread it out over 30 years. If you have a cattle note, it's 5 to 7, and then if those cows are open or they die or you lose calves or whatever, it's just a lot of risk. Can we do some custom grazing or something else? I see people doing that. They're making money doing it that way, and I love it. Because I'm all about the numbers. I am not about getting myself attached to something. Okay, if the numbers don't make sense, I don't care how nice that cow is. I don't want to make payment on her. Right? So some people it's an emotional attachment. It's business. And we have to take some of that emotion out of it. It doesn't mean we can't be emotionally attached. It's just that we have to make those decisions based on numbers, not based on emotion, 100%. Okay, that was a lot. I don't think I've done one that long in a long time. But that is the majority of, I've talked to a lot more people in the last 3 weeks, but that is the majority of it. And kind of the ones that we need to go over. Some of the big things that I have seen in the last 3 weeks. So as always, if you guys have not gotten the Farming Without the Bank book or Life Without the Bank, or you've not gotten Nelson's book, go to farmingwithoutthebank.com. Do that. Order them now if you want to order them as Christmas gifts. If you are a business owner or you work in the ag industry and you have clients, if you're an agronomist, if you are a seed salesman, if whatever, why don't you give these out as gifts rather than giving out, a coat or something that people aren't going to use? Maybe as a farmer, you want to give one of these to your John Deere salesman. That would be funny. Okay, let me know if you have questions, comments, concerns. You can message me here on Facebook. You can, if you are watching this on YouTube later, you can comment below. You can email me, MaryJo@WithoutTheBank, whatever works for you. You will reach me one way or another. Okay, so let me know if you guys have anything. Otherwise, you have a fantastic weekend, and I will see you next week.